Hey, Bubba Trades! I want to do a video analysis update of the stock market. We'll talk about the S&P, as well as XLY, QQQ, and SOXX, Apple, Nvidia, and Micron, AMD and Disney, Ford, Delta Airlines and Pfizer, JP Morgan and Camping World, Simon Property Group and Energy Fuels, Tesla, Enphase Energy and First Solar, Plug Power, Li Auto and NIO, the Hong Seng, Amazon, Facebook, Shopify, Cloudflare, Datadog, Bitcoin, and Ethereum. So we'll start with SPY, but first, I posted on my Twitter account a little recently that I'm using a straddle on the Metaverse ETF, where I bought the 9 call and the 9 put expiring in February of 2023. It's kind of a directionless trade, a few weeks ago. And on the recent pop that we had on Wednesday, I bought another straddle where I bought the 10 call and the 10 put with that same February expiration on the Metaverse ETF to pair with that. So anyway, that's an example of how I'll use a straddle, a long gamma delta neutral. Straddle is what it's technically called, but really all it is a bet that the Metaverse ETF is going to have a big move, and I can make money on either direction. So that's one way that I can, get some downside exposure in my portfolio, but also some upside exposure. And I think that's what's going to play out. But anyway, I have to be able to call the bear bluff. I think that they have to be able to call the bull bluff too. So we'll get into why I think that's going to be what prevails. I think this is a wave 1 and an ABC wave 2. Where the length of wave A placed the wave B high is where wave C ends. So there's a lot of stocks and ETFs that I can go over where they've already gone down and they're highly correlated with the S&P, like XLY, like XLF, like Starbucks and Nike, like the financials, like a lot of foreign markets, like a lot of even transports. They've already gone down to the 61.8 to 78.6% fib. They've already gotten to that deeper wave 2 kind of retracement area. So I think this is a wave 1 and a wave 2. And we can see SPY enter a wave 3 and go break, off into the 500s. So if SPY does go break off into the 500s, what I'm going to be looking for is for it to break this weekly high on this RSI, because there's a rule in Elliott wave theory that says wave 5 must end with momentum divergence. So if it breaks above this weekly RSI high of 73.50, that's going to give me confirmation this is in fact a wave 3 in progress. The length of wave 1 placed at the wave 2 low gives a wave 3 target of about 600, and then there'd be a shallow wave 4 and a wave 5 higher. But anyway, that's kind of the more aggressive wave 3 target that can take SPY into the 600s, and I think it lines up with a lot of other ETFs. Keep in mind that we're seeing stocks like Enphase Energy, I think pretty soon First Solar, possibly even Apple pretty soon. They've already gone and broken or are about to break those late 2021 highs. So anyway, that's something to keep in mind. I think this is XLY. It formed a wave 1 and a wave 2. It's another example of an ETF highly correlated with SPY that's already gone down to the 61.8% retracement, where the length of wave A placed at the wave B high is where wave C ends. So I think the length of wave 1 placed at the wave 2 low above 132. 110 was that really wide, invalidation from earlier, by the way. But I think 132 is a little more useful for now. The length of wave 1 placed at the wave 2 low can take stocks like Starbucks, stocks like Nike that look just like this, and Tesla's in this ETF too. And so is Amazon on a wave 3. That's the length of wave 1 placed at the wave 2 low. That can take XLY into the 260s in the big picture. So anyway, here's QQQ and SOXX. They're very similar, but they're going to be important gauges for me for a lot of tech stocks, a lot of semiconductor stocks from the 2018 low. I think this is a wave 1 and a wave 2. This is a wave 3 and an ABC wave 4 correction. Where the length of wave A placed at the wave B high is where wave C ends. So the 61.8% fib of 258 is probably the most useful downside level. I had that wave 1 high all the way down at 229 originally, but I think 258 is a little more useful right now. Wave 5 in Elliott wave theory, one of the principles is that it's either the length of wave 1 placed at the wave 4 low, or it's the length of wave 3 placed at the wave 4 low. If it's the length of wave 1 placed at the wave 4 low, we wouldn't see wave 5 make a high above the wave 3 high. So that's what one of the qualifications for a wave 5 is that it will break the wave 3 high. I think wave 5 will be the length of wave 3 placed at the wave 4 low, and that can take the Qs. If we start to see kind of the melta play out, that can take the Qs up to the 500s. Now, I know we've had a big week, right? As one of my favorite Fin Twitters say, don't get giddy and complacent. That's why I talk about, the straddles that I'm using. I'm always making sure that I can call the bear bluff. But there's something called upside exposure, and I think a lot of people are about to see why that's actually a risk. So anyway, here is SOXX. I think this is a wave 1 and a wave 2. This is a wave 3, another ABC wave 4, where the length of wave A places wave B high is where wave C ends. So I have that wide level, the 78.6% fib to this wave 1 high, which is about 269 to 258. That's pretty far right now. 269 would be a very wide invalidation. I think 322 is a little more useful. The length of wave 3 placed with wave 4 low in the big picture can give SOXX a target up to the 700. So I know that sounds pretty wild, and especially after, a couple big weeks, people are going to say, oh, the bulls are euphoric. Keep in mind, though, it's not going to sound so crazy when Apple's above this high. It might not sound so crazy now with Enphase Energy and pretty soon First Solar above this high. And I saw some people that really just scan for stocks that make, 52-week highs probably found, a lot more. Anyway, I can't tell that to my broker, but it'd be pretty interesting if we saw Apple above the December high pretty soon. And we already see, Enphase Energy, possibly First Solar too, above important highs. And they're kind of related to the semiconductor sector. Anyway, wave 3 placed at the wave 4 low in the big picture can take SOXX to the 700. So here's Apple. Wanted to get the Apple count. It's a little different than what I'm doing for some of the other tech stocks, where I'm looking for a wave 1 from the 2018 low, a wave 2, a wave 3, and a wave 4. It's important to note for Apple that even if that was the case, we'd still be looking for a pretty large wave 5 target that's going to be a lot more conservative than what I'm about to say. So anyway, it's a little different. I want to give a different view with Apple. I think this is a 1, 2, 3, 4, 5 wave 1 from this low that occurred in September. So one thing I always like to point out with Apple and AMD, but especially Apple, pretty uncannily in 2021, each of these rallies was forecasted by a lot of readings on the bar chart, straddle, and strangle screener. Okay, so that's not the magic screener. It's not, a genie, but it's looking for stocks that institutions are loading up straddles on, particularly when they have when they have low implied volatility rank, low implied volatility percentile, and they're betting on the direction of this move, but they're also using that to hedge their positions. So anyway, what would happen? Let's say that someone bought a straddle, or an institution bought a straddle on Apple right here when it was at the 160s, and then Apple fell. What they would be able to do is they would be able to buy shares of Apple against that straddle. So let's say they bought the 160 call and the 160 puts, in April of 2022, which a lot of institutions did, according to the bar chart straddle screener. And let's say that Apple had a pretty steep, quick correction right after that. Well, what would happen is that the put delta, the probability that those options are going to expire in the money, would get pretty high. So let's say that Apple's put delta went from being 50 when it was delta neutral, when it was just a call and a put, and Apple was at 160, where both the strikes were. And let's say Apple fell and the put delta, by the time Apple was below 150 in the mid 140s, got to say, negative 80, negative 90. In theory, an institution could buy 80 or 90 shares of Apple against that in the money put, and they'd kind of have a risk-free position because if Apple recovers, the gamma is going to kick back in, and the put's going to become weaker and weaker as the shares take over. And if Apple keeps going down, then the put's kind of a pre-hedge on the shares. Anyway, that might have sounded like a lot of gibberish, but that's how institutions are using straddles and strangles to hedge positions before they enter them. That's what I've been trying to document for literally the past 2 years. It looks like, once again, it's foreshadowed a big rally in Apple. Anyway, it did for each of these as well. This is an ABC correction from this low that ends at the 61.8% retracement. I do expect it's going to hold. I'm not going to chase Apple at this level, but above 129, I do expect a wave 3 to begin. The length of wave 1 placed at the wave 2 low gives Apple a wave 3 target of 209. It can have a shallow wave 4 and a wave 5 higher. After that, we can get to that when that happens. I wanted to give a little more conservative view of Apple. I talk about Microsoft a lot as an important gauge for big tech. But anyway, here is Nvidia. It's another one from the 2018 low, wave 1, wave 2, wave 3, wave 4, and wave 5. This is an ABC correction where the length of wave A plays the wave B high is where wave C ends. For what it's worth, Nvidia was another one. Lots of readings on the bar chart, straddle and strangle screener before the explosion. Okay, it's not the magic screener, but it's how institutions are using straddles to hedge positions before they enter them. And then they're using these kind of scam wicks, as they call it in the crypto community, to buy against the bloated puts. Anyway, this is a wave 1 and a wave 2 at the 61.8% retracement. 98's pretty wide. I think this low right here of 115 is a little tighter. I think SOXX, that chart I just went over in the NASDAQ, is much more useful. Even a chart like Tesla would be more useful. But I think this is a wave 1 and a wave 2. This is a pretty ABC correction at the 61.8% fib. This is where wave 3 can begin in the big picture beyond the 340s, beyond the 350s for Nvidia. So that's Nvidia. Here is Micron. Very similar idea. It's a little more, not as dramatic as Nvidia's a big wave 1, but I think it's a pretty clear wave 1 view. This is a wave 1, 2, 3, 4, 5 waves impulse. Now an ABC correction where the length of wave A places the wave B high is where wave C ends. Another one at the 61.8% retracement. So 43 is a little wide of an invalidation. It had a little bit of a pop, but I think this is a wave 1 and a wave 2. So Micron can go on a wave 3 to the 120s. We could be seeing, it's no guarantee, but I think we could be seeing down the road, especially if we saw Apple above the February 2020 above the late 2021 high. That'd be a big leading indicator for a lot of these tech stocks. But even seeing some of these clean energy stocks, which I'm about to go over, they can be leading indicators, particularly for the semiconductor sector. Anyway, here's AMD. I think one piece of evidence was that Enphase Energy and AMD, their big rallies last year were to nearly identical dates. Anyway, that's just a little anecdotal. Here is AMD. It's another one where, kind of like Apple, I want to make sure my SOXX view is clear, my QQQ view is clear, because that's going to be a very important gauge for me for AMD. But I think that this is a wave 1, another one from the 2018 low. I wanted to keep it the same, 1, 2, 3, 4, 5 waves up. It's important to note that even if someone wanted to zoom out to the bigger picture and say that wave 1 starts all the way down here, it's important to note that that would just be a lot more aggressive than what I'm about to say. So kind of similar to Apple, why, give the moon boy view. The view I'm about to go over is pretty aggressive anyway. But anyway, there's always multiple views. I think that SOXX and QQQ are really important gauges for me. And I think that Micron and Nvidia as well, are pretty nice charts. I think Tesla also is a good gauge for AMD. I think this is a 1, 2, 3, 4, 5 large wave 1 and an ABC wave 2 at the 61.8% retracement. So a very wide invalidation and a really ridiculous invalidation would be the 78.6% fib of 76. So I think that this low right here of 71 is a lot more useful. They got right below this wave 4 low, man. That was just, when the crypto community says scam wick, I think that they're talking about AMD just going about 5 pennies below 72.50 and then ripping. Anyway, I think this is a wave 1 and a wave 2 where the length of wave A places the wave B high is where all these wave C's are ending. The length of wave 1 places the wave 2 low with Micron, with Nvidia, with possibly Tesla, can take AMD on a big wave 3 in the big picture beyond the 160s, even all the way to the 200s. Kind of similar with Nvidia, that it could get pretty aggressive, but even just breaking the wave 1 high would be rather significant. At this point, AMD could be another one where it was all over the bar chart, straddle and strangle screener. It was literally the exact same thing. I posted, what I thought about AMD right here. Oh, ha ha ha. Right, while the institutions are loading up straddles, and what are they doing? They're buying against the bloated puts while you're laughing, right? They're buying against those bloated puts because that's about to happen. It could be the same song, second verse again. I think that this wave 2 low of 71 helps define the downside risk. The upside risk could go as high as 200 and even beyond in the big picture, kind of similar to Nvidia. Here is Disney. Disney in the big picture got a little bit of a kick save with earnings not breaking this wave 1 low. I don't think it would have been the end of the world if it did. but it has turned around a little bit, and it's really trading with the streaming sector almost more so than the travel sector. Disney's kind of it's kind of two sectors at once, in my opinion, the travel and the streaming sector. That's kind of an appeal to it. But I think in the big picture, the biggest appeal is that this is 30 years of chart history and progress, and I think that's really important for the transports, the travel sector. That when stocks have a lot more time on their charting history, from an Elliott wave standpoint, it gives the wave theorists more degrees to work with. It gives them a little more, not necessarily confidence, but a little more data to work with. So I think this is a 1, 2, 3, 4, 5, a massive wave one for Disney. Even if it had gone and broken that wave one low, I don't think it would have been the end of the world. We'd still be looking for a pretty important wave two low to end. But anyway, what I believe is the more accurate view is that this is a massive wave one and a wave two. And I'm not trying to be grandiose, but it's a 30-year wave count, right? In Elliott wave theory, the largest cycles can take many years. And, a stock like Disney, if it goes on a multi-year run, it's going to be pretty obvious why they made it kind of embarrassing for retail, just to be frank. But anyway, I think this is a wave one and a wave two. I think this is another wave one and another wave two. Disney would be, if it did recover all the way and go on a massive wave three, another one where lots of straddles and strangles were being bought, during the corrective time. And then they were just buying against the bloated puts. So anyway, that's why sometimes I'll see a stock on the bar chart straddle and strangle screener once, and then it'll have a dip, and then that's when the institutions buy against it, and then a few months later, they're buying the straddles on the way up. Anyway, this is a wave one and a wave two. I think this is another wave one and another wave two. We can see Disney enter wave three of wave three in the big picture. The length of wave one placed at the wave two low can take Disney all the way up to 216 for a minimum wave three target before a shallow wave four and a wave five higher. If wave four retests the wave one high and wave five is the length of wave one placed at the wave four low, in the big picture, Disney could go all the way up to the 320s. And in my opinion, that would just complete a large wave three. We'd have a consolidation period wave four before a wave five higher. I'm looking for 79 is a pretty wide invalidation. If it was, just about calling the bottom, 90 would be a little tighter. But 79 to 90, I'm looking to hold. And I'm looking for a wave three in the big picture to the 300s to begin. Maybe a little more medium term, but also, a pretty wide time frame. Disney will be in the 200s also. So anyway, that's Disney. Here are more travel stocks, more transportation stocks. Here's Ford, not necessarily the same kind of travel stock or streaming stock that Disney is, but I think that this is a 1, 2, 3, 4, 5 waves impulse for Ford. Let me look at this weekly chart. I need to move this wave one measuring stick over a little more, but I think this is a 1, 2, 3, 4, 5 wave one for Ford and a wave two that ended at the 61.8% retracement. What I really liked about Ford was that when it went on this big wave one, it made a new high on the weekly RSI. So I know it sounds like a silly rule, but there's a rule that says wave five must end with momentum divergence. So that means that this, on the largest degree, is not a wave five. So this whole cycle from the March 2020 low is not a wave five. In my opinion, it's a large wave one that's subdivided into 1, 2, 3, 4, 5 waves. The point is that one reason I was looking for Ford to make new highs, and still am looking for Ford to make new highs, is because it didn't make a new low on the weekly RSI when it made a new high. So that means wave five didn't end with momentum divergence. I think that means this is a large wave one and a wave two. And I think that's what's going to play out, that Ford's going to enter a large wave three up to 32 in the big picture before a shallow wave four and a wave five higher. 8.65 was a wide invalidation. It's not very useful right now. 10.61 is a lot more meaningful to say wave two's ended, and Ford can begin a wave three. So I'm not really going to chase Ford, but I think this is important evidence for a wide variety of sectors that a lot of people wouldn't think. Ford's not only a transport, an auto stock. I think this could also be evidence for a lot of EV stocks. So maybe that's not such a bold idea, but I think that Ford's going to be trading not just with the travel stocks, not just with the transports. I think it could be a good evidence for the EV sector as well. I think I remember during some of those, EV rallies in 2021, 2020 that Ford was moving with stocks like Tesla and that. Anyway, this is a wave 1 and a wave 2. Ford can enter a wave 3 up into the 30s in the big picture. It's got to get above 25 first. But when it does, then that weekly RSI rule, once again, where wave 5 must end with momentum divergence, will have helped to predict another high. So anyway, that's Ford. Here is Delta Airlines, another transport. I think Delta Airlines and I think the airlines and the automobile stocks are going to move together. This is really a clear view of the airlines and also Boeing. So I'm going to use Delta Airlines and Southwest as really my gauge for, most of the airlines and also Boeing as well. I think this is a 1, 2, 3, 4, 5 large wave 1 and a wave 2 for Delta Airlines. And from this low, another wave 1 and another wave 2 at the 61.8% retracement. I'm looking for Delta Airlines to hold about 24.95 and go on a wave 3 of wave 3. That's the length of wave 1 placed at the wave 2 low. That can take it all the way to the 60s before a shallow wave 4 and a wave 5 higher above 24.95. So that's Delta Airlines. It's another one where a lot of years of a wave count is at play. So long wave count, long time horizons, but this is a 10-year wave 1 and a wave 2. That means if a wave 3 of wave 3 begins, it's going to be one of those multi-year runs that it's going to be easy to look back and say, oh yeah, that's when they shook out, retail, right? I'm not really interested in looking back and laughing and say, oh, haha, that's when the retail traders got shaken out. I'm more interested in that this is a pretty big opportunity where wave 3 of wave 3 can begin on the largest degree for the transports. And the reason that I think that that's a little special for transports and, auto stocks and stuff like that is that they're kind of also value stocks as well. People want to get into arguments about debt and stuff, but there is an idea for me that when I'm trading a value stock and I have, a little bit of a margin of safety, so to speak, with, all the hard assets, and I'm not an accountant, but it's a little safer to own a value stock than it is a growth stock that IPO'd, in the past 2 or 3 years. So that allows me to take bigger positions in stocks like Camping World, stocks like Pfizer, stocks like, other value stocks, in the material sector, in the metal sector, in the, energy sector even. So anyway, I think that a 10-year run possibly beginning that ultimately takes Delta Airlines and all these travel stocks, beyond these wave 1 highs could be a pretty big deal for Delta Airlines, even making it to the 60s before shallow wave 4 and a wave 5 higher. I think ultimately in the big picture, 1, 2, 3, 4, 5 waves, taking Delta Airlines all the way possibly to the 80s. I know it's a long way away, but possibly Delta Airlines could not just stop at the 60s. It can go all the way to the 80s to end this wave 3 in the big picture. So that's Delta Airlines. I think it's a great gauge with Southwest Airlines above the 78.6% fib, about 24.95. Really giving a great gauge for a lot of airlines and aerospace stocks. Anyway, here is Pfizer. It's a large degree count that I'm going to focus on right now. A big wave 1 and a wave 2. I think this is another wave 1 and another wave 2 for Pfizer. And the bar chart, straddle strangle screener, iVolatility.com's top 200 volume and open interest filter for stocks with 0% IV rank and IV percentile helped me to participate in a very nice options trade on Pfizer from around this range in 2021, 2022. Keep in mind that a lot of the really bullish news about Pfizer had already been known in February 2021, March 2021. And so, one of the things that I was told was, we already know everything we could possibly know about why Pfizer is going to be a good idea, right? But the options markets didn't really start taking advantage of that. They didn't start taking advantage of that, but, they made retail wait. And while a lot of retail traders had lost their enthusiasm for Pfizer, that's when it starts appearing on the option screeners, the straddle screener, and that's, the thing about implied volatility. It's really low. And institutions take a lot of advantage of it. Also at a time when retail traders have kind of given up on a stock. It's low implied volatility, kind of I'm done with this stock. It's boring. We look across the market. We got a lot of stocks that have been sideways for 3 or 4 months. Football season's coming around. People are going to start betting on the over and under. And while some of the dividend aristocrats take the next leg higher. Anyway, I think Pfizer's breaking out of a multi-decade base. Ultimately, this can take it all the way up into the 80s. In the short term, I'm looking for from this low, wave 1, wave 2, wave 3, and wave 4 has developed. So I'm looking for Pfizer to go on a wave 5 higher, hold above this small degree wave 1 high of 43, and head up to 68 for 1, 2, 3, 4, 5 waves. And then those 5 waves will complete wave 3 at the 161.8% extension of this wave 1, which is 68. So I'm looking for 43 to not get broken. Pfizer to head to 68. Here's JP Morgan. The Morgans are looking good. Morgan Stanley, JP Morgan. Anyway, this is the wave 1 and the ABC wave 2 for JP Morgan at the 61.8% fib. I'm looking for the 78.6% fib of 97 to not get broken. I had this wave 2 low of 90 is a much wider invalidation, not as useful right now, but JP Morgan paying a 3 or 4% growing dividend. If JP Morgan goes under, there's probably not going to be a stock market anymore, right? So this is a store of value. It's a blue chip. And let's be honest, it's going to be really easy when JP Morgan's in the 170s to 200s to be like, oh, yeah, well, duh, it's JP Morgan. Like, you're not exactly Sherlock Holmes for figuring that one out, public trades. But the point is, it's easy to call stocks blue chips, when they're at all-time highs, right? But it's a lot more valuable to do it during the corrections, especially stocks that pay dividends, because then that yield is just getting massive. I mean, for some of these stocks right now, if you look at the bear counts, you'd really be looking at, some of the dividend growth, blue chips, I guess, like Starbucks, like JP Morgan, they'd start yielding 5, 6, 7% dividend yields just for holding them. And I'd be like, I'd take that. But anyway, I don't think that's going to be an opportunity. I think, seeing a lot of these quote unquote blue chips, yielding 4% yields, that's going to have been the opportunity. This is a wave 1 and a wave 2 for JP Morgan above 97 to 90. A wave 3 can pay a nice dividend all the way to 200 before a shallow wave 4 and a wave 5 higher. JP Morgan, another one, Bank of America, XLF, the whole financials services industry at the 61.8 to 78.6% fib of that wave 1 rally. Here's Camping World. I've had a long history with Camping World, including options. I'm not going to get into all of it. I've been holding Camping World for a bit. I had an options trade as well, so I don't want anyone to think that, it's not about bragging about the winners, but I originally bought a elite position on Camping World and a share position where I took what I would usually consider a full position, the same size as the value stock. And Camping World pays a nice dividend, so I was willing to hold those shares. I exited the elite position, from the mid-20s to the, low 40s. And I've been holding, these shares for a bit and collecting the dividends. So, I just want to say, when I say long-term, I'm, especially for a stock that pays dividends, I'm willing to hold for a long time. And I think that's about to reward me with Camping World. I have trimmed it a little bit. But it's still, a nice position size for me. I think this is a wave 1 and a wave 2. I think this is another wave 1 and another wave 2. Another stock very similar to Camping World is Winnebago. I like that chart as well, and I can get into that. I'll probably post about that sometime. But that might be supporting evidence for Camping World. I'll probably post that on my Twitter account next week. But I think this is a nice little base, a wave 1 and a wave 2 from the IPO, and we broke above this wave 1 high. And I think this is another wave 2, so we can see Camping World enter wave 3 of wave 3. This wave 2 into the 61.8% fib. I like it above 20. I'm honestly just going to hold it. If you really want to know what I'm doing with Camping World, I'm taking the Andrews pitchfork, connecting this low with this high and this low, and I'm looking for Camping World to hit the median. If I do that, it's going to mess up all the numbers on this chart. But anyway, I think wave 3's begun. The length of wave 1, place at the wave 2 low, can take Camping World up in the big picture above the wave 1 high of 49 all the way into the 60s before a shallow wave 4 and a wave 5 higher could be nice little IPO breakout. And they're going to make these difficult for, the big ones. People think it's a conspiracy theory that institutions and MMs are using these kind of scandalous drops to get retail out of, big winners, like stocks that pay massive dividends and could be breaking out of IPO bases. But what they're really doing is that they're using option straddles, they're using low implied volatility, and then they're buying directionless trades. They're buying directionless a call and a put with the same expiration, and then they're taking advantage of the drops to buy against the bloated puts, and then that's always the time when it's ha 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 the loudest, but that's when the institutions are buying the most against their bloated puts. The point is that it's not all about always just because a stock's going down that a retail trader is wrong. A lot of times if a stock's going down in the short term, in a weird way, if a retail trader was wrong about it before, it could be evidence that they're right about it in the long term, if that makes sense. That they could be using these dramatic shakeouts to get retail traders out of big winners, right? People think that's a conspiracy theory. I'm kind of putting together the mechanics of exactly what they're doing. They're using straddles, and then they're buying against the bloated puts. I think that's going to be the case with Camping World as well. That 0% implied volatility rank a percentile in this range. It can enter wave 3 of wave 3, go the length of wave 1, place the wave too low, all the way to the 60s. So I'm going to be holding Camping World for a long time, but I think soon a good time. Simon Property Group, someone on a forum somewhere pointed out, around this low, without using wave theory, without using anything, the Simon Property Group had been yielding a pretty huge yield at that point. They were using that as evidence that, a low could be putting in, that I guess they thought Simon Property Group was a really good stock. It's a, big winner or something. And what was it? Just going to start yielding 8%, 10%, 12%, while all the other REITs start yielding 20%, and it's just like, so was the real estate market going to collapse? Anyway, it could collapse, but I think that Simon Property Group suggests that it won't. I think this is a 1, 2, 3, 4, 5 wave 1 for SPG. It's another one where it's going to sound silly now, but I'm using the fact that this weekly RSI made a new high to say this is not a big wave 5. In my opinion, it's a wave 1 and an ABC wave 2 at the 61.8% fib. The length of wave 1 places the wave too low can take Simon Property Group in the big picture, all the way to the 200s, probably paying a growing dividend during that time. It's another one where, it's a little different. I mean, opportunity can be an overused word, but for me, when a stock's yielding a dividend that's probably going to grow, it's a much different kind of opportunity, especially when that's a stock that is kind of intricate to our society, right? It's real estate. It's, Starbucks. It's JP Morgan. It's, recently oil. It's like, wait a minute, these things aren't going away. They can pay me for owning shares. And if I think that, that the stock price and the dividend is going to go up, to me, that's an opportunity. But this is a wave 1 and a wave 2 for uranium fuels. I think this is another wave 1 and another wave 2. I secretly think that the uranium sector is going to be huge evidence for the clean energy sector, but I'm not going to get carried away with fundamentals or correlations like that. I am a little interested. I'll be honest. I'm a little interested in this bill they're passing, spending bill. We saw recently in early 2021, a pretty interesting group of sectors responded to a spending bill. Anyway, I noticed that the uranium stocks were mentioned in that. So that's a little interesting. The options market is very interested in the uranium stocks right now. I didn't mean to get into this. I have a little more evidence in a folder somewhere, but recently uranium fuels and UEC, I'm getting off track. That's why I leave the timestamps. Recently, uranium fuels and UEC has 0% implied volatility ranking percentile. I actually took a few more pictures that are very interesting, that most of the options that were being bought were to the call side. Anyway, I'm not a flow trader. I'm not trying to get into flow trading. It's just another one where keep an eye on the uranium sector, because I think the options market certainly is when these implied volatility levels are close to zero, and we have this kind of spending bill coming around. Anyway, I'm gonna get, people are gonna go crazy when I talk about fundamentals, but I'm not the fundamental guy. I'm, Elliott waves and option analysis, but I think this is a wave 1 and a wave 2. The length of wave 1 placed the wave too low suggests that all I'm trying to say is that I think uranium fuels entering wave 3 of wave 3 is going to coincide with a lot of other clean energy stocks, and also possibly the broader energy sector as a whole. I think this is a wave 1 and a wave 2. Uranium fuels has put in wave 2 at 4.69, and it's going to enter wave 3 of wave 3. Go the length of wave 1, place the wave too low, up to 11.82. and honestly well beyond 11.82. That's the minimum wave 3 target before a shallow wave 4 and a wave 5 higher. 4.32 would be extremely wide. I originally bought uranium fields here. I call it Camping World one more time. I originally bought uranium fields here. I sold half here, and I've just held the other half through this. So anyway, I just want to give a little more detail on uranium fields and Camping World, just because, I am holding stocks for a while. I'm not just someone who says, oh, long term, especially if a stock pays a dividend. I got a lot of wives. Anyway, this is a wave 1 and a wave 2, and I'm married to some of these in the long term. Anyway, I think uranium fields is going to enter wave 3 of wave 3, go beyond 11.82. If there's a monster wave 3 and a wave 4 that retests the wave 1 high, I would expect wave 5 to be the length of wave 1 placed at the wave 4 low. Ultimately, uranium fuels could have a little bit of a moon boy count to 18. 4.32 would be a wide invalidation for that. UEC, which I've gone over recently, good evidence for uranium fuels as well. And I am not going to give up on this one. So let's see. I might have to reload Tesla. Elon apparently sold Tesla, man. What was he thinking? Does he not know Elliott Wave? Anyway, I think that's just some bear bait. Oh, man. Let's get into Enphase Energy. Tesla can wait. Tesla always gets to be first. I think Enphase Energy deserves to be first right now. I could probably just tell you what I think about Tesla without looking at the chart anyway. I've said it so many times, but yeah. Anyway, view, enter full screen. Here is Enphase Energy. I like doing these videos during the day. Sometimes I don't like doing these videos during the day. Enphase Energy, does it deserve not special treatment, but in analysis special treatment because it's the largest holding of most clean energy ETFs? In my opinion, yes. It's also important to note that there's some fundamental connection between the Enphase Energy and First Solar and the semiconductor sector. Okay, I'm not really the fundamental guy, but these sectors often, Enphase Energy moved with a lot of the semiconductor sector related names like Tesla and AMD last year. Anyway, so it could be evidence for those names. That's all I've been trying to say. I think this is a 1, 2, 3, 4, 5 wave 1 for Enphase Energy and a wave 2. So a large wave 3 is in progress, and that's what I've said for a bit. Okay, now we've broken this wave 1 high. So what I said before that was that wave 3 would go beyond the wave 1 high, but even if there was a shallow wave 4 that retested the wave 1 high, and wave 5 was the length of wave 1 placed at the wave 4 low, that I would expect the length of wave 1 placed at the wave 4 low to give a wave 5 target in the big picture to take Enphase Energy up into the 450s. So in the big picture, that's where I'm expecting that any dip that occurs in Enphase Energy is going to get supported until it reaches the 450s. So that's my opinion. But Enphase Energy is blown up kind of from this level. So I'm not going to go chase it. But I do think it's really great evidence for a lot of clean energy stocks, even some of the broader tech market. This is a wave 1 and a wave 2. It's blown past the 161.8% extension. It's broken this wave 1 high. It's confirmed, in my opinion, this is wave 3 of wave 3 in progress. And ultimately, I believe, even if there are dips, even if there are shakeouts, the Enphase Energy is going to be supported all the way into the 450s. I'm not chasing it at this level, but I'm still exposed to it via ICLN. But why am I not betting on Enphase Energy dipping? Why am I not buying puts? Well, one, because it's within wave 3 of wave 3, and it's probably going to the 450s. That's a pretty good reason. A lot of other stocks, like the NASDAQ, the semiconductor ETF, the semiconductor stocks would also say don't bet against Enphase Energy. I think First Solar is a great example of, why I'm not going to be betting on dips in Enphase Energy. I think this is a wave 1 and a wave 2. This is another wave 1 and another wave 2. Basically, this is a 10-year base, and we've broken out into wave 3 of wave 3. I think this is another wave 1 and another wave 2. And now we're going to see First Solar pretty soon. Pretty soon. You're getting there. I can see it. Pretty soon we're going to see First Solar above this wave 1 high of 123.10. Like Enphase Energy, it's going to confirm it's within wave 3 of wave 3. And man, this would be great. This would honestly be great. You're not ever supposed to get, my rule is don't be happy about price action ever. Be happy about being prepared for price action. But this would be so much evidence for the clean energy sector, more so than the clean energy bulls already had. It breaking out into wave 3 of wave 3, breaking both of these wave 1 highs, and going back to the 61.8% retracement. This is a wave 1 and a wave 2. It looks like First Solar is about to confirm. This is a wave 3 of wave 3 in progress. The length of wave 1 plays at the wave 2 low, can take First Solar up to the 150s to the 161.8% extension, which is 181. So that's the next zone for First Solar. In the big picture, it's really important to note that this is a model, this shallow wave 4 and a wave 5 higher is a model that I've had for a while to find an eventual target for waves 1, 2, 3, 4, and 5. So the most important target, what I believe is the conservative target in the biggest picture, is that even if there's a wave 1 and a wave 2, and there's a massive wave 3 to the 150s to the 180s, if there's a shallow wave 4 that retests the wave 1 high and a wave 5 higher, wave 5 will be at least the length of wave 1 placed at the wave 4 low, and that can take First Solar up into the 200s in the big picture. First Solar going 1, 2, 3, 4, 5 waves up to the 200, in my opinion, would just end a black wave 3 for wave 1, wave 2, wave 3. We'd have a sideways consolidation period for wave 4 before a wave 5 higher. So that's called a series of 4 5s and 4 5s. And anyway, the point is, a lot of people laughed that this was just 1 2 1 2 1 2. It's not about being right. It's not about whatever. But we are about to see wave 3 of wave 3 of wave 3 end before a shallow wave 4 and a wave 5 higher, and that's going to end wave 3 of wave 3 before a shallow wave 4 and a wave 5 higher, and that's going to end wave 3 of wave 3. Anyway, there are degrees to Elliott wave theory, and First Solar just broke out of some of the biggest ones. In my opinion, I'm very happy to see it give a lot of evidence with Enphase Energy, hopefully in the near term, breaking above 123.13, being the next semiconductor stock, the next solar stock, I should say, but they are kind of connected to prove it's within a big wave 3 of wave 3. The 150s to the 180s will be a great gauge in the medium term for clean energy bulls. Here's Plug Power. Oops, snap. Plug and Tesla don't want me to talk about them today, but I've already memorized what I think about Tesla, so that wasn't going to stop me. One thing I've talked about Tesla that I talked about with AMD and Apple, all of these rallies, or not, I shouldn't say all, this rally and this rally preceded by lots and lots and lots of readings on the bar chart, straddle and strangle screener, more times where they're using these dramatic dips while everyone's saying ha 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 to buy against the bloated puts before the big move. And I think we just saw it with Apple. We could be seeing it with AMD right now. We could be seeing it with Tesla soon, where once again it's going to help have foreshadowed a rally like this one and like this one. Anyway, I think the most important count for Tesla is just from this low. I think First Solar and Enphase Energy are extremely important for Tesla, particularly Enphase Energy and also NEO, because NEO, Enphase Energy, and Tesla, the last time I checked, were the three biggest holdings of QCLN, a clean energy ETF. So there's that ETF connection, giving a lot of evidence that they are pretty highly correlated and should move generally in the same direction over time. Here's Tesla. It's a wave 1 and a wave 2 from this low. This wave 2 ended at the 78.6% fib, exactly where the length of wave A placed at the wave B high is where wave C has ended. I think wave 3 of wave 3 is going to begin. I think we're getting a little bit of a heads up from Enphase Energy and First Solar and Apple that Tesla could be close to this high soon. Anyway, that's not something I'm, buying weekly calls on, but the options market has been loading up, and I've just, seen time and time again, it's the same story. It doesn't mean past performance will indicate future results, but it could be another one where the bar chart, straddle and strangle screener, really help predict, Tesla, Apple, and AMD taking the next leg higher. Anyway, wave 1, ABC wave 2. The length of wave 1 places the wave 2 low gives a minimum wave 3 target of 1319. That's the minimum wave 3 target. We could go all the way to the 161.8% extension of wave 1, but I want to see the 1300s get hit first. But the 161.8% extension would be higher than that. The point is, even if there is a shallow wave 4 that retested the wave 1 high and a wave 5 higher, the length of wave 1 placed at the wave 4 low could take Tesla all the way to the 1900s. In the big picture, I know that sounds crazy. I know I have a YouTube channel. I'm talking about the possibility that Tesla can go to the 1900s. But if First Solar's, in the 150s and the 180s, if Enphase Energy is possibly heading to the 450s. We'll talk about some of these Chinese EV stocks too. I talked about some of the, NASDAQ and semiconductor and tech holdings. There are some of these more aggressive counts playing out in, Tesla's neighbors. I think that the length of wave 1 placed the wave 2 low gives a minimum wave 3 target of the 1300s, which I'm expecting. I think 620 is a tight stop. I'm still going to use the wave 1 low of 539 as the wide invalidation. And that would be, a little more useful for a more aggressive target than beyond the 1300s. So anyway, that's Tesla. Here is Enphase. I already did Enphase Energy, but Tesla didn't want to load at first, so that kind of threw me off. Here is Plug Power. It's another one. It's in ICLN. I noticed actually that Plug Power was on the bar chart straddle and strangle screener in late July. And the institutions had bought the 20 call and the 15 put expiring September 16th. I think they paid about in the mid $200 range for both of those options. And then those, that premium just absolutely exploded when Plug Power had a big move up. And I think they've made a 250, 300% return. But anyway, they're not just buying the straddles and strangles to hedge. They're buying the straddles and strangles to make money too. And I think that we'll see with my metaverse straddles. I think that the metaverse straddle is going to hedge, but I think that metaverse straddle is going to make money. And Plug Power, one really fun thing to do is go see, especially for the ones on the bar chart straddle and strangle screener, where the options that they're buying expire in a few weeks. Go see what happens to those options. Pretty interesting stuff sometimes. For this one, Plug Power is really paid the straddle holders who were loading up on it in late July. I think this is a wave 1 and a wave 2. I know this sounds silly, but Plug Power could be another one where this weekly RSI making a new high for wave 1 showed this wasn't a big wave 5. In my opinion, it's a big wave 1. This is a wave 2 with a 78.6% fib. Really important to understand that a lot of evidence coming from First Solar, Enphase Energy, and also Tesla, but Plug Power and Fuel Cell and Workhorse and some of these crazy ones, they're small caps, and they have a lot of risk, but that's because they have a bunch of reward too. And the institutions are using straddles to manage the downside risk, but I think that they're more interested in preparing for the upside risk, and that can play out with Plug Power in the big picture. This is wave 1 and wave 2. Above this wave 2 low, that's very wide right now, about 12.70. But I do think wave 3 of wave 3's begun. Plug Power can go, kind of do some crazy stuff. And I think if it does start doing some crazy stuff, going to the 70s, then, First Solar getting to the 150s to the 180s, Enphase Energy getting to the 450s, possibly Tesla as well, are going to be important gauges for Plug Power, because it could go beyond 75 in the big picture for a crazy wave 3 of wave 3, but it's a small cap growth stock, and sometimes the upside risk, believe it or not, does play out. Li Auto could be an example of that. So anyway, I've held Li Auto for a bit. I originally bought it with XPEV in this range. I'm still holding it. I slightly scaled out a little bit of Li Auto. Didn't sell too much, but I am in Li Auto and XPEV together. And I'm exposed to both of them, and I like them. I think they're going to do well. So anyway, I've been holding them for a bit, and growth stocks sometimes, retail traders get real excited about them, and then, they're kind of like goldfish. 8 months goes by, and they're like, let's bet on the over/under for the NFL, and that growth stock they were talking about all of a sudden was being accumulated during that time it was getting called a POS. Anyway, Lee could be an example of that. I think this is a wave one and a wave two. I think this is another one and another wave one and another wave two. And Lee's broken this wave one high. I suggest in the big picture that means the wave three is in progress to the 161.8% extension, which is 50. I think this wave three is subdivided into 1, 2, 3, 4, 5 waves. And I think that we're going to see, this is 1, 2, 3, 4, 5 waves. We're going to see Lee head up to the 50s. I already own it, so I'm not going to chase it. But I think it's pretty important evidence for NEO in China as well. We'll get into NEO and the Hong Seng in a little bit, but it's might be a leading indicator because we've seen some of these Chinese-related names form the same wave one and wave two kind of action, and one by one, a few of them have broken out into wave three or wave three. Lee's kind of the most glaring example. It's broken this wave one high, and I think that means it's heading in the big picture to the 161.8% extension, which is 50, which would be a break above this wave one high and confirm that an IPO base has been broken out of, and that Lee and XPEV were being accumulated for the past year and a half, 2 years for an IPO base. There's very few things more rewarding than catching a stock that breaks out of an IPO base. That's why there's very few things more difficult than doing that. And for me, the only way to do that is with managing that high beta risk with position size up front, taking a long-term approach, and growing thick skin. Anyway, this is another one where NEO, it broke this IPO low. That doesn't guarantee that the proper wave count for eternity is that all these stocks like Palantir, like Virgin Galactic, like even just off the top of my head, a couple like Rocket Mortgage, Unity Software maybe, that have broken the IPO low. Coinbase would be another example. It doesn't guarantee that they're in bear markets forever. Stocks break the IPO low, and that doesn't really, we talked about Camping World recently. It can still go break out of the IPO base and form a wave one and a wave two. So when there's less chart history, that's also part of the higher risk with growth. I think that NEO is a good example just to remind, just because a stock breaks an IPO low doesn't mean that it's in a bear market forever. It can still go break that IPO high and confirm that was a wave one and a wave two. I think this is another wave one and an ABC wave two at the 78.6% fib. The length of wave one placed at the wave two low can take NEO on a wave three up to 77 before a shallow wave four and a wave five higher. I know that it sounds, that sounds a little casual, right? To say, oh yeah, NEO, it's at 21, the next target 77. Next stock is important to understand. I talk about NetEase a lot. I've talked about a lot of clean energy stocks. I really view stocks as members of sectors, right? And to me, the Lee auto chart was just as much of an analysis of Lee as it was of NEO, as it was of the Hong Seng chart that I'm about to go over. But NEO I'm viewing with the clean energy sector as a whole. I'm viewing with the Chinese sector as a whole. And so I'm using Lee and also stocks like Tesla as kind of supporting evidence, and also stocks like I'm about to go over, like the Hong Seng. Right now, the wave two low is a pretty nice level of 11.67 to define the downside risk. NEO is another one where I think the MMs are using straddles to manage that downside risk, but I think they're also using them to manage the upside risk. I think NEO can enter wave three of wave three in the big picture, especially if we see Lee start to go take another leg higher towards 50 here, and we see Tesla start to take off as well to the 1300s and possibly beyond that in the big picture. Here's the Hong Seng, a big reason I want to be exposed to China. NetEase I go over a lot, but this is a really beautiful wave one and ABC wave two, and it's not just the Hong Seng. It's a lot of Asian markets like Japan, even kind of India, but Japan and South Korea and India and a lot of global markets in general, and in Europe even, breaking out possibly. I know it's technically a breakout and a back test, or people will say, oh, it's a failed breakout. From failed moves come fast moves. So, but I think that what we're going to see is that in the big picture, this is honestly a 10 or 15 year accumulation pattern, a base, a nest, whatever, the name is. I think this is a wave one and an ABC wave two. I think this is a break above this wave one high that supports the idea. This is another wave one and an ABC wave 2. This wave 2 ends exactly where the length of wave A places the wave B high is where wave C ends at the 61.8% retracement. So I'm looking for the 78.6% fib of 15,557 to not get broken. I'm looking for the Hong Seng to begin a wave 1 and a wave 2, enter a wave 3 of wave 3 towards 40K in the big picture. We'll see if NetEase can load. It's another one very similar. I talk about China a lot, so I wanted to get into other growth stocks in this video. But NetEase is another one where it's a multi-year count, possibly in the Chinese market. A reason that I'm going to want to be exposed to these names for a while. And also, this is a huge market. It's a big, diversification opportunity. I think that, I don't really care what other people do, but I think one of the big mistakes that many are going to make is that they're going to be married to the American indices forever. And we could see in the long term, the multi-year runs, that the foreign markets were the alpha. I think that China could possibly be an example of that. Anyway, I'm not abandoning the NASDAQ and the S&P or anything like that. In the super big picture, though, I think that there's going to be more alpha in Asia, possibly more alpha in Europe. Those indices and ETFs have really lagged America for the past decade. I think they could really play catch up as they break into these wave 3 kind of legs that I've been talking about for a little bit. But anyway, here is NetEase. It's a great example of that. It's a wave 1 and a wave 2. I think this is another wave 1 and ABC wave 2 at the 61.8% retracement. That 57 is way too wide, not very meaningful right now. 68 is a pretty useful level to say wave 2 has ended. The length of wave 1 places the wave 2 low, can take NetEase on a wave 3 to 166 before a shallow wave 4 and a wave 5 higher on all waves 1, 2, 3, 4, and 5 above 68. Right, 68 was the number I just said. Above 68 can take NetEase all the way to the 230s in the big picture. And in my opinion, that would just end a black wave 3. We'd have a shallow wave 4 before a wave 5 higher. So it's a long-term view. That's why I talk about the Hong Seng and NetEase a lot, because they're just as important for my analysis of NIO, my analysis of Alibaba, my analysis of China, but also kind of some of those other growth sectors related to NetEase and Alibaba and, the Chinese EV names as well, like clean energy and some of the software stocks. Anyway, here's Amazon looking a little good, okay? This is Amazon. I mean, I really don't care about being right. That's honestly, I don't care about being right. I don't care. I have straddles at all times. If the market crashes, I honestly would expect that I'm more prepared than most of the bears, just to be frank. But this is Amazon. This is the stock that's taken over the world for the past 15 years. And I'm not trying to go on the Amazon rant, but people say they want to buy the next Amazon. Like, people say they want to buy the next Netflix. And I'm just think to yourself for a little bit for the past couple of months how close the most retail traders get to actually doing that, like on the current Amazon and the current Netflix. And that's not, anything that I'm concerned with, but it's just, if someone can't buy a 61.8% retracement on a stock that's literally taken over the world, I mean, just forget about Roku, right? Just forget about, just forget about ARK, right? Like this, I mean, Amazon to me is kind of like a litmus test. Like, people want to buy the next Amazon. How are you going to buy the next Amazon when it's at the 61.8% retracement on the current chart, like for the current Amazon, the one that's destroyed every small business for the past 15 years, just Jeff Bezos driving a truck over the rest of the American, business world, right? If someone can't buy a dip in that, forget about growth, right? And by the way, the reason I bring that up is, what is the next Amazon? The next Amazon's a stock that has a ABC correction. It goes deeper than the 61.8% retracement, and everyone gets called a bag holder. Like, I'm sorry, but there's kind of a lot of those right now, right? Like, what? The next Amazon doesn't look very fun to a lot of Retail traders, you ever go to a buffet and you just fill up your plate and you end up throwing like half the tray away? I think a lot of traders, their eyes are a lot bigger than their stomach. They're saying they want to buy the next Amazon. It's like, look at this Amazon chart. This is not fun. This is not exciting. This is not something, that's for the faint of heart. And to me, the only way that I can buy a growth stock is by managing this risk with position size. Because I know, that I think the MMs know that most traders just can't stand to be called wrong. They can't stand to be called bag holders, right? They don't want the next Amazon because they don't even want the current Amazon. You know what I mean? Anyway, I think XLY is an extremely important chart for Amazon. I think that, Starbucks and Nike, give a very good view. I think a lot of tech stocks give a very good view. I think this is a large wave 1 and an ABC wave 2. This wave 1 is subdivided into 1, 2, 3, 4, 5 waves. It's a large wave 1 and an ABC wave 2 where the length of wave A placed the wave B high is where wave C ended at the 61.8% retracement. It held above the 78.6% fib. I mean, that was nice. It didn't do that in 2008 and 2009. In 2008 and 2009, it was below the 78.6% fib. It was bag holder, bag holder, bag holder. Sometimes that's the price to pay. And for me, it's the opposite of how the intuition is that, a stock like Amazon, a growth stock, has the most upside, so I need to take the biggest position, right? No, for me, it's the opposite. And if it has the most upside, then I'm going to take a smaller position, and I'm going to compensate my position size for that beta. The stocks that get the biggest positions from me are boring as hell, and they pay 5-6% dividends, and they produce toiletries and rubber and stuff like in oil, right? Boring stuff. The growth stocks that could be the next big thing since sliced bread, I take smaller positions in those because I know if I'm even partially right, there was no need to take a big position. And also because I know taking a small position is the only way I'm going to withstand the bag holder phase. I think Amazon has ended the bag holder phase. It's going to hold above 101 and go on a wave 3. This is the length of wave 1 placed at the wave 2 low in the big picture. That can take Amazon to 224. It'd be a little wild to see if Amazon reaching 224 happened because, or even some of these bigger charts, right? Because let's say Amazon does go up to the 220s for wave 3, have a shallow wave 4 that retests the wave 1 high, and then a wave 5 higher. The length of wave 1 placed at the wave 4 low could ultimately take Amazon to the 300s in the big picture. And I think that's funny because 300 and 224, they don't sound so outlandish for Amazon, but a couple months ago they would have because Amazon didn't have a stock split yet. So it wasn't 240, it wasn't 220 and 300. It was, the 4,000s and the 5,000s, and those big numbers sounded more crazy. But remember, stocks do have stock splits. Here's Meta. I'm finally getting used to calling it Meta. This is a wave 1 and a wave 2 from the 2018 low. Many big tech stocks from the 2018 low forming 1, 2, 3, 4, 5 waves, ending a large wave 1 and an ABC wave 2 at the 78.6% fib. I think wave 2 is ended. I'm looking for Facebook to hold, I guess I'm not calling it Meta anymore, but I'm looking for Meta to hold above 137 to 123 and enter a wave 3 of wave 3. The length of wave 1 placed at the wave 2 low. Says Meta can drive the metaverse ETF. Facebook has a lot of relationship to a lot of these kind of sexy growth stocks in kind of the e-commerce world and kind of the social media world. I talk about Twitter and Snapchat a lot, but obviously this is now the metaverse ETF, and I think the metaverse is going to be another one of those sectors that people have to get used to and recognize. I know it sounds goofy, right? It's supposed to sound goofy. That's why they give the best returners the stupid names, like Bitcoin, like Roku, like Metaverse, right? It's supposed to sound dumb, especially when it drops 15% after I buy it. But I think this is 1, 2, 3, 4, 5 waves for wave 1 and wave 2. A wave 3 of wave 3 to the 400s can begin for Facebook, and it's in the e-commerce sector. It's in the growth sector. It's, I think, going to be useful evidence for maybe stocks like Shopify, stocks like PayPal, stocks like Square or Block. They need to stop changing the names. Anyway, Shopify, in my opinion, is a 1, 2, 3, 4, 5 waves impulse for wave 1 and an ABC wave 2. It's at the 78.6% fib. Quite frankly, there's no low that I can find to trade against. 28 is just the nearest low, to be quite frank. There's nothing really too special about 28. I think it's useful for defining the downside risk, but Shopify is at the 78.6% fib. And what's the bull count? Well, what's the bear count? The bear count is that Shopify goes to zero. All right, so that's the downside risk, is that Shopify goes to zero, so it would lose $40 per share. What's the upside risk for Shopify? Well, that's the bull count. It's a wave 1 and a wave 2. The length of wave 1 places the wave 2 low could take Shopify up to 202 before a shallow wave 4 and a wave 5 higher. We don't need to talk about beyond that, but if in the big picture, right, kind of like Solana, kind of like some of these, growth stocks, sometimes growth stocks do the crazy thing. If there was a big wave 3 that was followed by a shallow wave 4 that retested the wave 1 high, I would expect the wave 5 to be the length of wave 1 placed at the wave 4 low. We could see possibly, Shopify get into the 300s in the big picture. Sometimes growth stocks do have a zero added to their price, okay, but not until or not before they've made owning that the most embarrassing thing in the world. Here is Cloudflare. We got a little bit of a reversal from Cloudflare, maybe a little bit of a low to trade against for kind of the software sector. Cloudflare and Datadog, they're not as, well, Cloudflare had a pretty big dip recently, but Datadog and Cloudflare right now, they do kind of have a similar wave 3 setup, in my opinion. I think this is a 1, 2, 3, 4, 5 waves impulse for Cloudflare and an ABC wave 2 correction at the 78.6% fib. The length of wave 1 placed at the wave 2 low can take Cloudflare on a wave 3 beyond this wave 1 high of the 220s, ultimately to the 240s. In the big picture, even that, would not be the end of the road. It has a little bit of a low to be above 38. I'm not going to, buy Cloudflare after this, big rip. I am kind of exposed to the software sector through the metaverse straddles, but I think Cloudflare could be interesting if it breaks above this wave 1 high at any time in the future. It'll be another example of a new high on the weekly RSI, confirming this wasn't a big wave 5. In my opinion, it's a big wave 1 and a wave 2. We'll see Cloudflare in the big picture begin wave 3 or wave 3. I think it's more useful as kind of evidence right now, kind of similar to Datadog, that we're seeing possibly some of these wave 2 lows get put in the software sector. Datadog could be a very useful template, probably the most useful template for a lot of the cloud computing kind of software related names. I'm not the fundamental guy, but just kind of the software high growth sector. Datadog has pretty defined risk. I think this is 1, 2, 3, 4, 5 waves for wave 1 and wave 2. This is another wave 1 and an ABC wave 2 at the 78.6% fib. The length of wave 1 placed at the wave 2 low can take Datadog on a wave 3 of wave 3 to the 200s. 210 would be that equal legs target before a shallow wave 4 and a wave 5 higher. If wave 4 retests the wave 1 high and wave 5 is the length of wave 1 placed at the wave 4 low, Datadog can go up to the 300s in the big picture. 69 would be a very wide invalidation. A little tighter would be 81 says wave 2 is already ended. And wave 3 says the next stop is the low 200s, possibly in the big picture, the 300s for Datadog. Here is Bitcoin and Ethereum. I think that Bitcoin has formed a 1, 2, 3, 4, 5 waves impulse from the 2018 low. I think that Ethereum is a little cleaner because it has had an ABC correction where the length of wave A placed at the wave B high is where wave C ended. Bitcoin didn't quite reach it, but Ethereum did. I talk about Ripple a lot. I talk about Solana a lot. I talk about Cardano a lot. These big wave 1 and wave 2s and kind of the more recent, I guess cryptos don't IPO, but Solana and Cardano and Ripple, I believe, are going to enter a big wave 3 as well. I've talked about a lot of stocks in this video, so I'm just going to do Bitcoin and Ethereum. I think this is wave 1 and wave 2 above 14,840. I think we can see, kind of some of these. I know it sounds ridiculous, but if we look at Morrow, if we look at Riot, possibly some important wave 2 lows getting put in for some maybe ridiculous wave 3s to occur for Bitcoin. I think this is wave 1 and wave 2 above 14,840. I'm looking for a wave 3 up to 83K to begin, and there'd be a shallow wave 4 and a wave 5 higher. Beyond that, Bitcoin getting to 83,000 is enough to look for right now. Here is Ethereum. I think Ethereum's getting a little prettier. It's had this pretty nice and a pretty clear 1, 2, 3, 4, 5 waves impulse. By the way, I know I haven't gotten Ethereum perfect. Well, not bad, from the 500s to, 4,500. But anyway, I was wrong that Bitcoin and Ethereum were going to hold this low. That's what I was expecting. I still think it would have been great risk reward. But anyway, I think that Ethereum is looking pretty interesting. This is a 1, 2, 3, 4, 5 waves impulse. The only reason I was bringing up, my track record or whatever is because this wave 3 on the weekly chart, I think it also did it on the monthly chart as well, but I know it definitely did it on the monthly chart. It formed a wave 1 and a wave 2, and this wave 3 broke to a new high on the weekly RSI, and I was using that as evidence for why we'd see Ethereum make at least another high, in mid-2021. Anyway, another example of that rule playing out. I think this is 1, 2, 3, 4, 5 waves for wave 1. I think this is an ABC correction where the length of wave A plays at the wave B high is where exactly wave C is ended. So I'm looking for 883 to continue to hold and say that Ethereum is going to enter a wave 3 all the way up to 4,865 and honestly quite beyond that. Bitcoin and Ethereum breaking to new all-time highs is the minimum expectation for wave 3. It'll be followed by a shallow wave 4 and a wave 5 higher.